Hey, everybody. Hope everybody is doing well this evening. Welcome to Note Night in America. Hope you all had a great week, great weekend. We're back. We're glad to be back here on Monday night with all of you. A lot of great content to cover with you tonight. Good to see folks from all across the country. Hey, Jerry. Hey, everybody out there. Got a lot of stuff to cover here, but we'll save that stuff and salutations for a little bit later. Tonight's call. Before we get rocking on the main subject, if this is your first time on Note Night in America, hey, feel free. Let us know where you're watching from, whether you're watching us live here on Zoom or you're also catching us live on the YouTube stream or catching the replay. We want to know what part of the country you're joining us from. So welcome to Note Night in America. We've been doing these for quite a while now, since 2011. Hard to believe it's in our 11th year of doing something on Monday night for our note investing community. Lots. I was thinking I should probably take a look and see how many people have attended a webinar or watched a live stream. It's literally a lot. I'll tell you that. We know that there's several 100,000 downloads just of the past podcast episodes to give you a bit of an idea. But anyway, we do take these episodes, do throw them on your favorite podcasting platforms, and subscribe to the Note Night in America podcast. Also, all videos are also on YouTube, and you can subscribe to the YouTube channel by going to weclosenotes.tv to subscribe directly to take in all the great content on there. Not only will you find Note Night in America replays, you'll find presentations, webinars, podcast episodes of our other podcasts out there. The Note Closer Show podcast with 1.2 million plus downloads. And then, of course, our mid-year conference returning again for the 9th time here in June or July, in late part of June, Note Camp Live. And so lots of great content out there for you guys to take in, start to learn the nuts and bolts and get your feet wet in the note industry space. But we're glad to have you here. Want to give you guys a heads up. This coming Sunday, we have our notes due diligence masterclass. It'll start at 9 o'clock. This is our third masterclass in this series. We did one on calling banks. We did one on, the finding deals on the masterclass there for you. And this is the third one in our masterclass. This coming Saturday, starting at 9 a.m. Sunday. It's actually Saturday. You can tell I haven't gotten a lot of sleep when I start getting my Sundays and Saturdays mixed up. But this coming Saturday, starting at 9 a.m. Central Standard Time, at 7 on the West Coast, 10 o'clock on the East Coast, we'll do a due diligence breakdown from start to finish, from when we're getting into tape of notes, how do we start doing our due diligence on specific assets? We'll start pulling up actually collateral, servicing notes. We'll look at a PACER report, literally show you how we walk through step by step with our due diligence. We'll give you some checklists along the way for you to take and replicate yourself. And we'll teach you the fast way of doing it and then the longer engineering way of doing it in case you want to do it that way. But we literally show you the front end side till you get your approval offer, and then you do a deeper dive into the due diligence once you've got approval. But we'll go through that this Saturday at 9 a.m. You can still get a 50% off ticket up till the day before if you go to wcnmasterclass.com. That's wcnmasterclass.com. The discount's automatically figured in there. It will go away though if you don't sign up by the 1st. So wcnmasterclass.com, and got some great stuff. I have to give a big shout out to Baldwin Advisory Group, who is sponsoring the one-day masterclass. Dickie Baldwin will be speaking on there. Many of you guys know him for places that we pull our BPOs and O&Es and some other stuff. So we're excited to have Dickie join us on Saturday as well. But if you can't make it, don't worry. It is recorded. The replays will be available part of your ticket. If you are part of our monthly WCN membership, it is included in your monthly cost. So no additional cost to attend if you're a WCN member. But anyway, we do have, just to give you a bit of an idea, some of the upcoming events taking place there. We've got a very full suite of classes over the next, really till July. We have a note weekend every weekend. We have 2 more master classes after this one, the notes marketing master class, the raising funds master class. We have our next 3-day virtual note buying workshop, April 22nd, 24th. It's hard to believe that's less than a month out. And then, of course, our big mid-year conference, Note Camp 2022, July 22nd to 24th. So all that's included with our WCN membership as well. So get signed up at noteumbrella.com. That's noteumbrella.com to take advantage of that. But anyway, any questions about that before we dive into our main subject matter? Hey, Ken Strauss from Houston. Hey, Cynthia Henry from Decatur, Texas. Hello, Anthony Hill from Portland, Oregon. Good evening, RJ from New York City. Hey, Linda Martin from Huntington Beach. It's good to see we got people from the East Coast, the West Coast, and all over the place. So let's bring on the meat and potatoes. That's why you're here on Note Night in America. So, we all know that part of being a note investor is not doing all the work yourself. It's not like fix and flipper or wholesale when you try to be a jack of all trades. The most important vendor and relationship you can have out there is with your loan servicing company. And unfortunately, not all servicing companies are created equal. Some of them, honestly, I don't believe they believe in the service side of servicing. So was extremely happy to be introduced to our main speaker tonight. Came from a coaching student who did a very thorough, in-depth analysis of a lot of the servicing companies out there, and was just blown away with the service. I've been blown away with the service just a little time I've known him, on how he and his team react. And then just his experience, when I got his bio, I was blown away. It's like, we got to get him on Note Night in America here for you tonight. Hey, Bruce from Brookings, Oregon. Good to see you on here tonight. But we are really jacked up. This guy is a investor too. That's one of the great things about what you'll learn from him tonight. He is the founder of Sombrero Capital, which is a Texas tax lending business out there. He is also the main shindig, or as maybe we like to say, the chief bottle washer at Covey Financial and servicing here in Texas out of San Antonio. He is also, this is one thing, couple of numbers on here. Him and his companies have paid over $90 million in property taxes. They are currently, and that's on over $500 million in real estate. And that is basically over and dealt and worked with over 8,000 plus property owners. That's pretty impressive. A little background. He is a former college lacrosse player from the University of Denver, and has been here in Central Texas. He calls San Antonio, Texas home. And we are honored to have Mr. Eric Covey join us on here tonight on Note Night in America for the first time. Eric, what is going on, bud? Make sure, I think I turned this camera off. Let me turn him back on here so you can see him face to face. What is going on, my friend? How you doing tonight, Eric?
Scott, thank you. I wish I had the same photo in my bio as I'm looking at myself right now, but all good. Yeah, thank you for having me.
Hey, it's pretty.
Age is down to me.
It's a little bit of experience, is what we like to call it.
Exactly. No, I'm in my late 30s, and it's kind of bad that, this type of business, or just being an experienced businessman, you lose your hair and your hair goes gray, and, I feel like there's a sign of wear and tear.
You know what? We call that seasoning.
City miles. Yeah.
Exactly. Yeah. Seasoning experience out there. Well, I'll tell you what, that's even more impressive, Eric, with what you've done and what you're doing out there. And I just absolutely love how very hands-on that you've been so far with some deals of our students have been doing. You're responsive to phone calls on a deal approved. I just got recently approved and some stuff like that. So just honored to have you here. And I think you've got Larry Hoffman, got a big fan there. Absolutely love Covey Financial. He goes, thank you for all the work. It's much appreciated. And I just got to give a shout out here. Larry closed on his first note deal, and before servicing was really even transferred, Larry sent out a hello letter to him. The bar responded. Eric actually picked up the phone call and really had the bar ready to rock and roll on a modification or reinstatement, even before servicing was transferred from the old servicer. Right, Eric?
That's absolutely right. I won't share too many sensitive details, but yeah, right. Larry's a client of ours. We're very happy with him. And like you said, servicing, we service a good number of loans. We're servicing over 5,000 loans now. And I think my competitors do me a favor. And the biggest thing I can just say is little effort goes a long way. And one of the big things we focus on is, I think in any type of deal, onboarding a loan properly is the key to success. And one of the things that we do is a simple welcome call to say, hey, Scott, welcome. We're your servicer now. I see you're a year behind. Have you ever thought about a modification? And he's like, I'd love that. I've been trying with the other prior servicer for years, and not going to name names. And
no names here, but that was a kicker. How many years?
Yeah.
Or how many loan sales that bar had gone through before anybody actually picked up the phone and called them? You remember it was like 6 or 7 or something like that?
I don't know the details, but all I can say is a little effort goes a long way. And our philosophy is, I'm part of the onboard team, and even on Larry's, one-off notes, I handle portfolio transfers of hundreds of notes and then one-off notes. And, I firmly believe this is one of like the stools on a bench that, makes it not fall. And, onboarding a loan properly is huge. And, I'm happy that it worked out for Larry, and, we're excited for him, and hopefully we get more.
Yeah, I know that he's working through due diligence and get probably about another dozen or two. So you have a presentation you want to get pull up, or you want to take Q&A, or what did you want to do tonight?
Yeah. So what I might do is I might take the reins here. I don't necessarily have a presentation, but I might just kind of talk about some things that I can just give tips on.
Perfect.
A lot of these might be redundant to what you do, Scott. And maybe when I'm done, I can maybe open the Q&A from there.
That'd be perfect.
Let me see. So I'll share a screen here if that's okay with you, Scott.
Yeah, go right ahead. Take it away, my friend. And then what I'll do is I'll jump off my video so it gets better streaming for you on that as well for you. But I'll be here and moderate, and we'll go from there. Okay.
Great. So I think the first thing y'all should see is maybe like our website. Y'all see that?
Yep. Covey Fin. There it is. Client login.
Yeah. Well, I kind of just focus on some like juicier things. And again, I'm sorry this is not pretty, but I'm happy to share this with anyone. But
dude, Scott, it's effective. It's effective, my friend. That'll work.
Sometimes simple way is the best way. So I'm not going to, a lot of things that I see that are sometimes, troublesome or concerning, or just maybe just lead to a hard relationship with a client. And I'm going to probably cover some things that you talk about, Scott. I already heard you mention PACER and other things that were like great signs for people who don't know what PACER is, but I'll explain that here in a minute. So whenever we deal with loans on, one-off buyers, and we also have clients with over 1,500 accounts with us. And, I've been a party to buying hundreds of tax lien loans and selling hundreds of tax lien loans. And, I think one of the things that I hate seeing my clients see is maybe some surprises that come up later. And what I mean by that is I always recommend our clients, and every time I get a new client, I kind of ask, hey, what are you doing? What's going on? Like, what are you trying to accomplish here? And they're telling me they're buying notes, and I kind of give them some of these tips. So, and Scott, please, if you've already covered this in previous podcasts, let me know, but I'm just going to try and go through these quick, and then we'll go to something else. Conducting due diligence, I, as a servicer and even like a note investor, I couldn't recommend this anymore. And there's probably a lot of things here that are probably be directed by what, Scott teaches you, or what you believe is right, or maybe what an attorney believes is right, or even like a specific industry, whether it's, certain type of loan. But if we're talking about a mortgage, like one of the first things that I see is like a big mistake some of my clients make is they don't even order a title report. That note, that property's been sold and someone's carrying a note that never got paid off, big no. Definitely order a title report. I think these costs vary from anywhere from like $100 to $250. Trust me, it's well worth it. Reviewing loan documents. This is one that I think a lot of people don't really do. I got a loan, kind of came to me in Michigan, I believe. And on the documents, it said there was like a default interest rate of like 62%. And I was like, that doesn't sound right.
That would be called usury, right?
Very usury. So, and again, the important thing is it's okay if the documents say it. Like, obviously, I think the important thing is to make sure it wasn't enforced. And I'm going to go down to the pay history here in a minute. One thing I'll say is maybe look at the seller, and I'll give you like a really funny story about me. Kind of like cases involving the seller, ensure the seller's authority to sign. We were dealing in a big note purchase a couple of years ago where we got into the weeds. We'd spent tens and tens of thousands of dollars of legal fees. We're going to buy around 2,500 notes. And turns out in the due diligence process, when we asked them, hey, please disclose us any kind of material things, it wasn't disclosed to us, but we figured out, hey, these assets, all 2,500 notes, are held in a receiver. So you can't even sell the notes. And it's like, great, thank you for wasting our time and money. So maybe just do a little diligence on the seller and just make sure you're not kind of buying, something that might come back to haunt you. And I think one thing I'll say too is, I guess I've grown skeptical. Scott, I don't know if you can agree with this, but, whenever someone approaches me to buy a loan, they better have a good reason why. And, sometimes, I don't know if you've ever talked about like rights of set off or other type of cases, but unless the reason is good, I'm really weary to, recommend or kind of transact with people because you never know what you're buying. One thing, this is actually kind of an interesting one. We had a client who said, hey, the seller can't produce the original note. And I told that client, don't buy it unless they produce it to you. Because Scott, I'm sure you've talked about not receiving original documents that could result.
Oh yeah.
Yep. So yeah, big issue. And it's one thing if their bank holds the paper, nothing wrong with that. You can probably coordinate with the bank to either they deliver it to you directly or just maybe set up an escrow company or attorney to be kind of like a middleman so that everyone's comfortable. But bankruptcy, Scott, I think you talked about that. Bankruptcy is a huge one. Make sure the borrower is not currently in bankruptcy. And I think this is the next one is kind of where I'm more simple on a drive-by inspection. I can't tell you how many notes I've seen where if you actually just do a Google Street View, it's missing a roof, and it's like, hey, just do a little bit of effort and just make sure the property's in decent relative condition, because again, goes back to my skepticism on sellers selling notes. You want to make sure you're not stuck holding the bag. But now I'll talk about maybe stuff that more pertains to me on the servicing level. Granted, we don't receive original documents, so we need to make sure we get copies of the documents, which we know our files are essentially like a lender backup because we maintain detailed files and we kind of organize everything in categories. And then one thing I can also kind of tell too, whenever you're buying notes from someone, if they give you like a flash drive or something in a very nice organized account number, name, kind of sorted file, you're going to say, great, this is going to be a great loan to buy. When it's kind of disorganized and kind of scanned as scan 1, 2, 3, 4, 5, 6, it kind of gives me the heebie-jeebies, but we always grab those and kind of organize them in a way. But one thing that I will say, this is probably where my kind of comments come in really strongly. So whenever we onboard loans into our system, we want to make sure that the terms match. So if it has late fees of X, if it has a grace day of X, if it has original balance of whatever it is, interest rates, certain things, we need to make sure our system matches. That's kind of why I'm so involved in the front end on onboarding loans correctly. And then importantly, I have a lot of clients who never receive full pay histories. And I'm like, hey, you better call that seller back and get it. Because, you may not realize that you need it until it's too late. And, whenever you're giving someone money is the time that they'll give you the information you request. But full pay histories is required for a variety of things. One, very simply, to just make sure you can kind of get from the original balance to where you're onboarding it, principal balances tie out. We have customers, whenever we onboard new loans, always dispute, well, I already made my April payment to the prior servicer. It's like, oh yeah, like here's your pay history, tell me where I'm wrong. And, and you definitely need to get an updated one because sometimes loans transact weeks prior to the effective date. And then at the effective date, when the funds are received and hey, it's all actually been transferred over, if there's any new activity, you got to make sure you get the new activity so that the balance is tied and there's no customer disputes. And then additionally, you need a full payment history for other reasons. If the loan goes to a foreclosure attorney or if the clients file for bankruptcy, one of the things that our office does a lot with attorneys across the nation is supply them with the information they need so they can tell the judge, hey, this is what we're claiming. And full pay histories are just a must. Here's another pretty big one too. And I'm sorry, Scott, am I going too fast or do you want to talk a little bit about pay histories or can I?
You're doing great, man. You are doing great. This is a good recap and it's a good aspect of everybody there. And we'll take plenty of questions when we're done here. So you're doing great.
Closing the loan is fun. You just got to make sure you get all the details.
Right.
And on the full pay history, you also need if a loan has a variety of charges, I mean, if applicable, like legal fees, any types of tax, like property tax advance, escrow advance, whatever it may be, there needs to be a clear detail of what these charges are. And it also goes back to the fact that, hey, if we have to show this in front of a judge, whether it's foreclosure or bankruptcy, they're going to ask us. And if us as a servicer or our client, the lender, can't produce these, hey, this is what the charges are for, you're at mercy of them saying, hey, you can't collect that, write that off. So details of charges is extremely huge. And a lot of servicers, at least, others I've seen, some of my competitors, one, if they're reluctant to share that, another red flag and not buy the loan. But two, it depends on the type of invoice, or the charge, but invoices would be ideal. But if not invoices, there should at least be like the payee name, how much it was originally to, and then what's the current balance, because you don't know if some of those charges have been paid off. That's where you have to like review the pay history. This is another kind of big one for us. We get loans sometimes that we don't have any contact information for people. And just like we kind of talked about Larry's loan that we onboarded, one of the first things we did is after we onboarded the data is give them a welcome call, say, hey, here's how you make payments. Here's our portal. Here's how you log in. A lot of times we get loans and they don't have a phone number. They don't have an email. They don't have a social, we don't have a mailing address. And we're like, hey, how are we supposed to, do our work here? How are we supposed to notify them? And, having good contact info for the ultimate borrower or borrowers, if there's more, I think is another big one that you need to request from your seller or the originator to make sure you grab those items, because without them, you kind of take a couple spaces back in effectiveness of servicing. Escrow items is another big one. So if a loan requires, escrow items to be collected, whenever you buy a loan, I think it's incredibly important to make sure, hey, there's an active policy in place. It's been recently paid or it's due in the future. Property taxes. I see some of my clients buy notes where there's 5 years of property taxes due. Didn't really bother to look at that, but making sure that there's no other liens. And this would come up in the title report, I think, in most of them. Making sure that these other kind of ancillary items don't come back to haunt you later. And it should be in the reps and warranties of a purchase agreement, but property taxes, HOAs, make sure everything's paid by the time you buy them. And I always recommend this. I've kind of learned this the hard way. I'm not a fan of spending money if I don't have to, but you should always have an attorney, especially if you're buying more than one note, you're buying a handful or even just one note, you might have an attorney prepare a PSA, which is also known as like a purchase and sale agreement, where the buyer and the seller agree to certain reps and warranties on what the transaction details are. You make sure the correct party signs on behalf of the seller, and then you make sure that all loans are not subject to like set off claims or disputes, which you'd hate to buy a loan that, hey, about 3 weeks ago the seller got notified of a civil lawsuit disputing something. And I always recommend just really, this kind of goes back to diligence, but for my items, I'd probably say number 2 here is key. And we've helped people whenever we have clients start off with loans with us, if they're delinquent property taxes, depending on the client, but most of the time we just pay them out of my money, and we just work on recollecting it back from the borrower. And if the borrower starts paying, we'll be repaid back, no problem. But if they don't and just continue to go delinquent, we'll square up with our lender once something happens, whether it goes to foreclosure or not. But Scott, I'm happy to maybe segue to maybe our business and some other kind of topics I want to talk about, but I might pose some questions right now to the group to see if there's any questions about maybe some of the things I talked about.
Sure. No, everybody feel free to type in your questions in the chat roll. We'll moderate them and go from there. One of the great things about what you just said is the thing that always frustrates me is I always like to see RPC, right party contact, and not like you said, there's no email, there's no phone number, there's no cell phone. I'm like, this is stuff that isn't that difficult to collect if you do a little social sleuthing or white pages, or worst case, you order a skip trace in a lot of cases. But it makes the transfer so much easier for the servicing company when you have that information that you've probably found while doing your due diligence. You know what I mean?
Oh yeah. And I mean, the seller should have it. And unless someone moved or changed their number, there's kind of like no excuse. But one thing I'll kind of say too is, as the maybe questions are thought of, we as a company maybe just kind of talked about how we work and how we're different. So we do skip tracing as part of our collection process. So anytime we have someone who goes delinquent and we just can't get a hold of them, we've got a skip tracing process to, try to hunt them down. Let me see, did a question come in?
Yeah, Larry said, Eric, I didn't know you paid back taxes. It's pretty damn amazing.
I help my clients out as best I can, Larry. But let me see. So one thing that I'll maybe just highlight ourselves and maybe how we're different. A lot of servicing companies, I guess, let me kind of go back in time to kind of how I got started. And Scott, I don't even know if you know the story about me. So I got in the tax lien business. We're doing a bunch of little $10,000 loans here and there. We're doing about 5 a day. We had to upgrade our software to start managing this ourselves. And then I got a loan back in 2012 sometime, a mortgage. And at the end of the year, I called my mortgage company and I said, hey, the servicer, whoever it was, hey, it's the end of the year. This is my first mortgage. I have escrow. I just want to make sure you're paying my property taxes. And they go, yes, sir. Yes, Mr. Covey. No problem. You have enough money in there. It's all good. And that was like a 3-minute phone call. Mm-hmm. Next month rolls around. I get a statement. I have this like $25 fee on my account. So I'm like, hey, what in the world is this? So I call back again to the servicer and I'm like, hey, Eric Covey again. Like I'm on ACH. Like, why do I have this $25 fee? And they go, Mr. Covey, that's because you called us. Oh. And I was like, come again? Like, because I called you for like less than 3 minutes of my life. And I go, yes, sir. And I'm like, what, you charging me now? And they're like, yes, sir. And I'm like, okay. So I kind of, from there, I got, driven over $50 to be like, hey, this can't be right. Like, this is not the way this should work. Like, I was outraged. And, I kind of did a little bit of research on kind of how servicing works and what like the common practices are. And I quickly concluded like, hey, this is like not fair. Doesn't make sense. So like our philosophy is, I believe we truly partner with our clients. So we have no laundry list of fees. We've got no onboard fees. I have no early termination fees. So if I don't serve you well, you can move servicing over. I'm not going to penalize you for it. No problem. And we really just have like one simple price. And honestly, like I just quote everyone $15. And if you have over 200 loans, I'll happily give you a better deal. But, all we do is we collect a monthly servicing fee and we only get paid when money's collected. And that's where I go back to being a true partner. So if and again, this is kind of why we do our welcome calls to ensure we get a first payment and many thereafter. And, we're incentivized to not let the loans be delinquent. We are incentivized to blast with letters, blast with emails, make delinquency calls, get payments in the system so that everyone gets paid. And I love that my other competitors out there have a huge laundry list of fees. They get paid no matter if payments are collected or not. And honestly, we've been onboarding a ton of loans lately. We've been growing. We've been, we're kind of, I think in 15, 16 states now. We got a couple of licenses pending. So we're excited to just kind of be a little bit more competitive just because I think we're fair and we're a true partner. There's so much in the servicing that happens. And I think one of the problems as being like a small lender or even a big lender is, servicing software is not inexpensive. It's very costly. Also, the escrow management is very, hair pulling and hair graying. And, servicing, I think, I can totally respect if someone wants to manage the loans themselves, like that's control I totally understand. But a lot of people outsource it so that, I have clients who were onboarding who say like, I haven't had a true vacation in years because I have clients call me about payments or I have to worry about paying something while I'm in Cancun. It's a good way to like outsource it. And I feel like, given our price and given our software capabilities, like, people are getting the best deal possible. And one thing I'll say too is I also believe that, it's not really like you get what you pay for when it's cheap. I just think we've got other sources of revenue here that it allows us to do this at a very, affordable scale, even though I believe the quality is, very strong. So let me see if any questions have come in. Service.
So we got a question off of YouTube. Ask the question. So at $15 to $20, does that even cover? Somebody asked your costs. What about if we're buying non-performing notes and we end up having to foreclose and we never collect on a payment? How does that work, Eric?
Great question. I mean, hey, I wish I could charge everyone a whole lot more money, but I don't. I'm a fair guy. And so we have enough business where we cover our, hard costs and then some. And we also have other forms of revenue in the tax lien business that helps us do other things. So it's kind of like a nice mix of overall revenue that allows us to do this. And how we charge the same thing for non-performing. We've got no conditional pricing, whether it's performing, high credit score, high balance, or very small one, non-performing. My belief is, we'll try our damnness to collect the payments on a non-performing loan. And if it goes to a foreclosure sale, we'll kind of just square up with the lender and we'll say, hey, we've serviced this for 4 months. You owe me less than $80.
Boom. Yeah, but that's one of the most important things I think when we were talking too, is like, hey, we didn't collect, but yeah, we serviced it for 4 months. You're not handling the foreclosure aspect of that. You're basically saying, hey, kick the file to the attorney. We'll provide payoff statements, stuff like that. But once we start the process, it's kind of handled in with the attorneys of that and the legal side of that, right?
Yeah, no, good question. Actually, this is a really good topic for everyone to hear. So I believe your servicer shouldn't be incentivized to do other things that could be more profitable. And I think other companies do some level of foreclosure work for additional fees or maybe higher fees. And I feel like that creates a unhealthy relationship that incentivizes them to do things that may not be best for the borrower or the lender client. So we as a company, we don't practice law. We do all the monthly notices, the monthly late notices to those that apply, the over 45-day, over 90-day letters. And we kind of and we bang them hard and we try them hard and we call people weekly. We have weekly delinquency calls. And, if that doesn't work, we also do skip tracing to try and hunt people down. And if that doesn't work, at a certain point, we recommend our clients like, hey, we've hit them really hard with everything we got. And it's been, 120, 160 days, 180 days. And, I think it's time to hire an actual attorney. And one thing I'll say too, I have a client who previously did his foreclosures on his own. And I don't recommend that, especially if you're talking about like residential homesteads and, residential mortgage law.
Wow.
I just I'm not a regulator. I'm not a guy who's going to, whistle blow him. But I quickly put a stop to that and said, hey, if you want to work with us, you better, don't tie me into a lawsuit, or yourself in a lawsuit. You're lucky you haven't been sued yet, but definitely let the attorneys handle it. And honestly, one thing I'll say about attorneys too is, depending on where your loans are, there's a lot of attorneys out there who do things like on a flat fee basis. And, what a lot of people don't realize is just because you get an attorney invoice for, $2,000 on a file, you have to clarify with your attorney what's collectible versus not collectible.
Right.
And I've seen a lot of clients who, hey, this is what my bill is. You got to add it all. And I kind of say, hey, look, like, I know this sucks, but I think you kind of worked with the wrong attorney. Because, I would recommend trying to find someone in your state. It doesn't really matter where they are, as long as they're in the state and they're, bar accredited. But you just negotiate a flat fee basis. And we work with a few across the nation. We've got one that's great here in Texas that, it's really just a schedule. Like, hey, if I do this, it costs this, and you can call them all you want and ask them questions. They don't bill you for. But legal fees are some, foreclosing is something that needs to be done by attorneys. In my opinion, we don't do it. And then, if you do kind of solicit some attorneys, make sure you're trying to negotiate a flat fee, because it's just easier and simpler. And one thing that the reason why I say that too is sometimes people call and say, hey, I've got my income tax. I want to get current, how much do I have to pay? We reach out to the attorneys and say, hey, give us a finalized fee invoice. This guy's trying to pay like right now. And it's just easier for them too to kind of compute what the add-on charges are.
Makes a lot of sense. We got two folks that asked the same question.
Oh, yeah.
What states are you licensed to do business in?
Oh, yeah. Great question. And this number is constantly moving target because we're growing.
Yep.
Website.
I know you've got like 5 pending or in the process. When we talked to you last week, you were saying.
Yeah, it's actually interesting. Some states, strangely enough, don't have any servicing fee license requirement, which, I don't know how that works, but I guess it works.
Right.
So on our website, I actually need to update this. I haven't updated our website in a while. So kind of start to finish, Arizona, New Mexico, Texas, Louisiana. I know we're working, Scott, with you on Arkansas, which I think we're going to apply. Just try it.
Yeah.
So that's in the works. Mississippi, Alabama, Florida. We're just got licensed in South Carolina. That's why I need to say I need to add this. We do loans in New Jersey. Not sure if anyone's out there in New Jersey, Virginia, Ohio, Michigan, and I think we're in Wisconsin now, if my memory serves me. But one thing I'll say is, we're at a size now when we get audited financials every year now that we can essentially, with a matter of filing some paperwork, service any state. The one state I have a licensing company that, does all my compliance and licensing with the NMLS. I've been advised to maybe not consider New York for,
Yeah.
for a long time. And I think there's a participant from New York, and that's not anything bad about New York, but the reason I kind of got told not to advertise New York is because the licensing process takes like 5 years would I apply today. So I don't even market that I'm considering there. So New York's one that I'm just kind of avoiding. And Massachusetts, I forgot what his reason was, but he kind of said something similar that it just takes forever.
Yeah.
But any other state, I think, is kind of fair game for us right now, other than those two. I know we're considering with Larry in Pennsylvania, and I think Indiana, and I think Scott for you, Arkansas.
Yeah.
So we got a few here that are not in green that need to be added.
Well, but that's a beautiful thing. If you've got, and that's the thing too, everybody, if you've got some stuff in the state that you're not showing green, then reach out to Eric. If it makes sense, you guys will look to do that. If it's a size, if not, if it's just a one-off, it's not going to make sense. And that's the one thing I want to make sure and clarify with everybody here. Eric will work with you if you're, hey, you've bought your first note and you're looking to grow some more. But if you've got one note and you've only had it for 24 months and never done anything beyond that point, probably not the right servicer for you. He wants to work with folks that are growing their portfolios. And he knows we all start, to begin with, you all got to start somewhere. But keep that in mind. If you're just bought one note and that's all that you own, and you never spend any time in the note business, probably not the right spot for you on this, right?
Yeah, I mean, we're willing to take long-term partnerships, and if someone's expecting to have a portfolio of over 15 one day, we'll happily take some risk. I think a question came in, are we in Oregon? We're currently not in Oregon, but I know Oregon's one of our easier states to apply to. And again, if you've got more than 5 to 10 loans in there, we'll happily, get set up.
Perfect there for you. Good stuff.
One thing I'll say too, we also kind of weigh that we get a lot of requests from certain states. So even if you just have one, you might just ping me, and I'm not sure where I can put I'll share my email address with everybody on this call.
Yeah, we'll put it in the chat roll, put it for everybody there. Let me do this.
One thing I'll say too is, another thing that amuses me a lot is I read reviews online of servicers, or I read, I Google like lawsuits with servicers. And if you guys currently have a servicer out there, that is great that, if you have other servicers, that's no problem. But just definitely dig into who you're working with or who you're considering before making a decision, because a servicer who's bad could lead to a lawsuit for everybody.
Yep.
And, there's a couple, this is public information, but we onboarded a lot of loans from Allied Servicing that they got punished in Michigan for, behaving without a license.
Yep.
And also in Pennsylvania, they got like cease and desist orders. And I think they're lucky it didn't become worse than that. But, make sure that whoever you choose, and I think we kind of try to make sure that our application's filed by the time we get the transfer in, the servicing in. But, as we kind of are growing in more and more states, we should be established there already. And if you have one loan in a state we're already established in, we'll happily help you out.
There you go. Exactly. Got a question here from the online. How is servicing a performing loan or non-performing loan different from, or basically tax lien? How is it different to service your tax liens versus a mortgage note? Is there any difference to it?
Well, I don't know how much time we have on this call, but so there's different types of tax liens. Texas has a unique law that it actually behaves more like a loan in Texas. In other states, they behave a little differently, and the servicing is different. But if I can just maybe speak on Texas right now,
yeah,
it actually, to make it simple, it's exactly the same as a mortgage, just a much smaller one. Average loan size is like 12 grand.
Makes sense. That makes sense, especially in Texas. Yeah. And then you're just collecting on the payments and then releasing it after a while if they pay off, or if they don't pay, stay, right?
Yeah, well, tax liens is harder to foreclose. You have to
Sure.
follow the same foreclosure rules at the tax office, and that's one of the painful aspects of the business. Is it takes up to like 2 years to foreclose on somebody.
Right. Yeah, definitely. Question here from folks. Somebody asked, are you looking to get licensed in California anytime soon?
I've gotten a few requests in California, and that's one on my radar to consider. And again, well, please reach out to me with that email, and I'd love to get to know you and see if it's something that we pull the trigger on soon.
Yeah. For those that are watching the replay here, if you're not catching, it's Eric at coveyfin.com. It's Eric at coveyfin.com. Larry says, Eric, I just want to thank you once again for everything you've done and are doing for me. It truly means the world to me. That's got to make you feel good, huh?
I'm very happy to serve Larry and others. And, I think one thing you'll find out about us is that I think we kind of try and care. And one thing that I can't convey on this call, and Larry, I don't know if you've worked with like Kathy or anyone else in our office, but I get emails from my staff on Sunday nights and just bizarre hours of the night that people are working from home and, even like off the clock. And it's amazing to me that like we've built a good staff that truly cares to get the job done and get, reports out and everything. And now, we have new software now. The reports are automated now, but everything that our staff truly cares. And that's the one thing I'll say that makes us unique. And I think it's primarily driven by the fact that I show up to work every day. I'm first in, last out. Our office is actually totally closed and dark right now. But, I think, I don't know how you can find that out, otherwise, but, we have good people here and we have people who care. And, I show up every day to make sure everyone does their job.
Well, that's true. Not every borrower is going to be sitting at home on a Monday through Friday, sometimes reaching people on Sunday nights, or people respond on Sunday nights or Saturday nights before they start to tackle the week.
Yeah, we do our best to have flexible hours for people to talk to us. And, I think we're also working at expanding our hours, and we even have like an after service, answering service that helps us take certain messages or just reiterate, hey, this is our mailing address. But, I think I think we have a pretty good, customer satisfaction rate. And, if anyone ever writes us a bad review, I think we have a couple out of many good ones that I personally look into and I figure out what's going on and I handle it.
Are you guys, got a question? Do you also service commercial loans or just residential?
Yes, we do anything secured by real estate. And in fact, we're actually getting hired in Maryland. Sorry, we're in Maryland as well. We're about to get licensed there. We're also doing like personal loans in Maryland. So anything anything with principal and interest and a loan balance, we can definitely service it. For the personal loans, it's a little bit less expensive than we normally do because there's no escrow or any of that stuff. But whether it's commercial or residential, it's actually indifferent to us on a service level.
Both first and second liens you guys are doing, obviously. It's all real estate and P&I.
That's right. And I know a lot of our competitors kind of milk it when the dollars are bigger on commercial loans, where again, we've got no conditional pricing. It's just one simple price that includes unlimited escrow items, and would love to have it.
That's really amazing, Eric. Guys, Covey Financial, if you've got loans, check into it. Get rid of the junk fees. I look at your servicing docs for sure. You're signed there for you. You're right, Eric. It's a hard thing when they say, oh yeah, we charge you for more per month, or it's hard to get a hold of somebody to answer a question about a loan. We've seen that a lot recently with a lot of things.
I'll share something really important too. I don't know if anyone on this call or ever watching this has loans that have gone into bankruptcy, but that's one thing we're very careful about, because bankruptcy there's no uniform bankruptcy payment way. Right. Every bankruptcy has its own unique payment plan and unique thing. And we onboarded some loans from a giant servicer, has 80,000 mortgages out of Minnesota. And so when we got the loans last July, we were like, okay, well, I'm sure they've done it right. They're, they probably know more than we know. And, they're probably just as good as we are. So, and lo and behold, a few months later, we realized that they misapplied over 3 years of payments on over 50 bankruptcy accounts.
Oh, wow.
And it's just like, come on. And, I think this is like its own unique topic, but the way payments are applied in a bankruptcy is like extremely complicated, extremely unique. And I think that's why some servicers charge for that, which we don't, to like say, hey, whatever it is, to put it in the bankruptcy code. But what was amazing to me is I told my client, as I pointed out, I'm like, if you paid them a conditional price on 40 of these, you definitely wasted your money. They didn't apply right.
Yeah. Yeah. It's you got to be careful of how things get applied. Not everybody knows that. We're talking with somebody the other day, and they were buying a note that was 3 months behind, and they in the bar made a payment, and they were like, well, why did this go to 3 months ago? Why didn't it go to February's payment? It was the February. I was like, well, it's got to go to the most latest payment first. It's not going to do anything soon, and you got to give them a chance to get caught back up. So something to keep in mind there. What you got here?
Yeah, I got one more thing to show you guys, and I'll hand the reins off. So a lot of people, like Scott, do you know how to calculate a 2-month cushion in escrow?
Kind of. Yeah,
Trick
it's a trick question. I know, right? Go ahead.
Yeah, so escrow, many of you all know the CFPB allows to have escrow have like a 2-month cushion. And it's kind of funny that you say like, okay, well, how do you calculate a 2-month cushion? Is it the total of charges, like the payments divided by 10? Like, how do you come up with a 2-month cushion? And that's actually a question that I get a lot. And every time we onboard loans from new clients, you quote escrow, we're like, why did you tell them that was the payment? That's not the payment. Like, who came up with that number? Like, so here in this example, I kind of just summed up in just a little schedule, the property taxes, the insurance, an HOA bill that's due annually, and then a pest control bill. Just kind of come up with anything I can think of for escrow. Mm-hmm. So I actually call it the total escrow obligations. The TOE is $87.50. And if you divide the TOE by 12, it's $729. But you'll see here that I came up with an $850.69 escrow payment with a 2-month cushion. And if you all can see this math, it's actually very simple math. Mm-hmm. You take the TOE payment, the TOE, like the original TOE divided by 12, and you multiply it by 14 months, and then you divide that by 12. That's how you come up with a escrow payment with a 2-month cushion.
I love that. That is a nugget there, everybody, because so many people, I bet you see a lot of these issues, especially on a lot of owner finance notes where people are trying to figure in PITI.
I saved the best for last.
It's great stuff there. Questions from it?
Yeah, yep. Go ahead. Yep.
No, I was just saying, I was just wanted to open it up for questions again for them out there, everybody. Somebody asked there, so you have a list of attorneys that you use in the states that you're licensed in?
We do. And we don't. So one thing I'll say too is, we have a list of people we work with, but we allow our customers to direct whatever law firm they choose. Like we're getting one in Miami right now that came from a big previous servicer that told them, no, you have to use our firm. No, you can use whichever firm you like. We're just the servicer here. These loans belong to you. And if this is an attorney who you have a relationship with and you like working with, like, we'll happily work with them. It's just a matter of kind of communicating. But we have a list of ones that we work with, and then we also will work with whichever attorney you use.
Awesome. That's a beautiful thing, because it's a pretty easy aspect of it. Somebody mentioned you're not going to hold our the attorney's comments hostage, that we have to go through you to get comments from the attorney. Because some what he's saying is that some servicing companies, they make you go through them to communicate with the attorneys. You know what I mean? And then you're waiting on the servicer to respond to your question from the attorney versus going direct.
No, you'll find we are easy to work with, and we'll happily work directly and not hold our customers hostage in any way.
Perfect. Good stuff there. Any other questions for Eric there? You a big basketball fan? I saw the Spurs logo there on your shirt. You excited for the Final Four?
Yeah, I think we had a Sweet 16 game here in San Antonio, but truly I'm not that big of a basketball fan. Just my brother-in-law is, and he gave me this shirt, and it just happened to be in my laundry rotation that I just wore. Yeah, I actually, one thing I haven't shown you guys, and I'll happily show you, is maybe some
Yeah,
of our custom software that we have. But honestly, I think for the sake of time, Scott, I don't know if this is like an hour-long podcast, but I think we might maybe save it for next time.
no problem. No problem. Well, we can pull it up if it's some. Yeah, if you think it'll be beneficial, bring it. Let's bring it up. Sure, we got
Well,
some.
yeah. So one thing, kind of talking on attorneys, one thing that we've kind of launched in our new software is I'm gonna log in on my side, so try not to show you guys anything too sensitive. Well, I think I can. This is not going to go on YouTube, so maybe I shouldn't. But the idea is on our software, we actually give our clients unlimited users on the lender side. What a lot of our clients do too is they set up their lawyer or their attorney or whomever accountant, team, the full team, including attorneys and whoever bankruptcy attorneys. They can be users in our software. So if they want to pull statements like a payoff statement or a reinstatement calculation, they can do it without even. We are happy to do it, but we give our clients the ability to do it if they like. And we can also upload documents back and forth to each other through our software. Our clients can pull all the statements that we sent out, all the escrow analysis that we've sent out, the late notices, all they can click bars and see everything that I see. And that's
Wow.
something that's unique to us, where a lot of servicers have limited lender access, where when
Yep.
I built this custom platform, it's actually the opposite. Like, I want you to have everything that I have, because we get calls from our clients like, hey, did you send them a late notice? It's like, if you click right there, you can see the one I sent 2 weeks ago. And then there's also conversation logs, and our customer service reps, actually get penalized if they don't make a conversation log. So if we find out, hey, someone talked to them, I'm like, all right, well, Myra, I'm going to charge you $25 out of your next paycheck because you didn't make a conversation log. And she's never made the same mistake twice. So
Right. Well, that's huge.
Oh, yeah.
That's huge because that's one of the most important things. The comments, but it's also very huge if you're given unlimited access. We have so many people that are buying nuts. They're using private money. They have funding partners, and for them to be able to have access and have the fly in the wall view of what's going on and full access to see stuff like that. That's a big advantage in a lot of cases. That's a huge tool to be able to use.
Oh yeah, I'm gonna log in as I have like a hard money pool that I manage. See, do I even have my login? I thought I saved it. Show you how often I log into that one. Here it is. So we're still making a couple tweaks to our software. So let me just move this around. I don't know if you can see this. So what we do is we kind of, you can do like a little search and just like search by month. Let's just look at it all. So you got 8 loans, none are delinquent. You got $3.1 million. We're coming out with like a couple new pushes here, but anyways, you can kind of also download stuff in Excel, get tons of details on principal, escrow balances, what's your delinquency summary like, some aging reports, again, another aging report, maybe like some payments that might be kind of pending that are kind of within the threshold, any loans by states. We're working on making this more of a map view.
Wow.
And then you can also kind of, if you have a loan in bankruptcy, you can click here and you can like pull up a little grid of loans in bankruptcy. But again, if I go to like my admin side, granted, I could probably spend hours just on this side of things, but I'm trying to just be quick. On the admin side, we let our client add. There's no limit on people on their side, and
Okay.
This is something that I think is unique to us. That hey, if you want 300 people on your big company, whatever it is you want your mother, your dog, everybody having access, put them on here. You can have it. There's no charge for it. But anyways, I'll spare you on our kind of our portal, but like this is something I think it's better done with a demo directly with a client.
Sure. But that's really good. As you see the value that if somebody's, give you a great example, anything over $250,000, if it's a portfolio, we usually do a separate LLC for the individual, but being able to log in and then that's being able to see the information on that and how it's balanced and what's going on. That saves a lot of times in pulling reports. You can just plug a few buttons in there and download the report and folks have stuff right there to take a look at. That's awesome.
Oh, yeah. So on my portfolio, it doesn't apply here, but what we do is we can kind of create subpools. So if you have a series LLC that has a bunch of, series, you can we'll give you a code and you can say, okay, and I don't have it for this one, but you can type in like whatever code, TRX, one, whatever it is, you can hit search, and then you can just get a grid view on those. Maybe 5 loans are owned by this thing, and you'll kind of do it just on that view. You can kind of sub filter our reports here as well.
Wow, that's really cool.
Does anyone have any questions maybe while we're doing
Let's
this?
see here. We got a question. Jerry says, can I have a loan payment sent to different accounts? So like if somebody makes a payment, can it go to, if he's doing 50-50, half goes to his account and the other half goes to his IRA investor? Yes.
So I assume, Jerry, you're talking about like maybe some of the loans owned by, an entity or a party, whoever it is, and another loans, but like another portion of loans owned by another party or entity. Yeah, shared investment loans or shared participation loans. Yeah, it's not a problem.
That's another awesome thing there. Good stuff there.
And
Eric,
no additional charge for that either.
Gotta love it. Gotta love it. Well, Eric, this has been really, really great. Love what you shared tonight. I hope everybody on here is, loving it, because I know people are like, wow, I'm getting some text messages from people here. This is awesome. So this is really good stuff there. So
one thing I haven't shown you, Scott, if anyone's interested, I think our biggest strength is our reporting. And I think Larry's about to get his first wave of it from us, but our reporting, I think, is one of our strong points, in addition to truly partnering with our clients. And, now that, we're having a lot of, we're actually giving people like some of the basic journal entries on like interest accrual on the end of the month and what a journal entry should look like. We're doing a ton of stuff on, I think our lenders now get like, don't hold me to this, but like 15, 16 reports every month, just automatic, and it's stored to our website. So there's also other kind of reports you can run daily, but I think that's like, Scott, for your podcast, I think we'll maybe not be able to show that, but that's one of our strengths.
No problem. Sounds good. Definitely there for you. Well, Eric, I want to thank you for staying late. I know that you were out driving around, getting back to the office or something like that. We were initially talking or something like that with the text messages. Thanks for coming on Note Night in America. I know I appreciate it. I know that a lot of people on here appreciate it. Selena says, thank you. Who else says something else on here? Larry says he loves it, obviously. I know Catherine says, thank you. Laura Miller says thank you on there as well. They love you as well out there. We gotta give them a big shout out for making the first introduction out there for you. So yeah, guys, check them out, coveyfin.com. Eric's email to reach out directly is eric@coveyfin.com. So Eric, thank you so much, bud, once again, and we'll see you around. All right, man.
Thank you, guys. Have a good night.
You guys. All right, guys, that is going to wrap it up for this episode of Note Night in America. Check it out. You definitely want to go back and watch again. Or drop an email, pick up the phone, call Covey Fin and ask them some questions on what states, or if you've got a portfolio, it's worth checking it out. We all know that one of the worst things is getting nickeled and dimed on stupid fees and a lot of things out there. And you really, truly, you can see how you can have a partner with Covey Financial with your note business. So go out, take some action, everybody, and we'll see you all at the top, buddy.